Good morning, team. It's your boy again. Okay, there's going to be lots of videos coming. In fact, there will be another one today, this afternoon, 3 p.m. The infamous Ricky Silber will be on live. We'll be talking about accepting VA offers and why VA appraisals, some people aren't going to like this, but why they're better than other appraisals. So a couple things. Something has to give here, guys. I don't know what it's going to be. I have my guess, but we can't keep making all-time highs in everything. We can't have a real estate market like this. We can't have stock markets making new records every day. We just can't be like this. Something's got to give. We've already talked about cash is trash. I'm going to look at interest rates here. I'm going to show you an important article. I'm also going to somewhat roast a commenter. A lot of people have been arguing with me. A lot of people are like, no, the real estate market's going to crash. And, a lot of people, just are lost. They're lost and they're not paying attention. They don't really realize what's taking place and what's going to happen next. So it's unclear what domino is going to fall first, but that there has to be something to get hit. So I'm going to take you through this. We're going to look at this, and I'm going to rant a little bit. But this is all information I believe that is useful for you, or I wouldn't be bringing it to the table. Okay. So first of all, we're going to take a look at interest rates. And this also has to do with the commenter I'm gonna talk about here in a minute. But I get ripped up on YouTube sometimes, and I'm cool. I'm good with anyone bringing any commentary to me. If you have an opinion, if you think I'm wrong about something, please let me know. I think it's great to have those kinds of conversations. But just know that I'm pretty well studied on this stuff, paying attention to it very closely, and so I'm bound to argue with you. I am. All right. So we've been talking about this downtrend in interest rates and mortgage bonds here, which is causing interest rates to go higher. Remember, when these bonds go down, interest rates go up. And unfortunately, our action here on what's going on today right here, not great. We started off the day up and we were above this resistance level and things were looking good. It was like, oh, come on, just take off, will you? Just go. And it won't. And why not? Inflation. Someone was asking me today about inflation, and she was like, well, so is that going to make like bread cost more money? And so if inflation gets to that point, this is what it would be like. Think about the real estate market right now. If it was like that way at the grocery store, that would be the worst case scenario. So imagine the grocery store only has 10 loaves of bread every day. That's it. That's what the real estate market's like right now. There's so little, when we say inventory, we mean product. So if the grocery store only had 10 loaves of bread every day, what would happen? Well, people would be lining up, in the store hours before it opens, or they'd be waiting, hovering around that area if it's a 24-hour store. They would be offering, I'll give you $100 for that loaf of bread. There would be people who get in and buy the loaf of bread, they'd flip it out in the parking lot to someone and make some money. That would be the worst case scenario with inflation. But unfortunately, right now, the pressure of this inflation on bonds is just so significant, we can't stop it. It's unstoppable. And yes, the Federal Reserve has let this get away. And yes, I will talk more about that in a second. But look at this. Here's an important article. Now, 2 days ago, I told you what was going to happen here with rates going up and what my concerns were with the stock market, because I believe the stock market is likely the domino that's going to fall. Something's got to give, and I'm guessing it's going to be the stock market. This is an important article because this is actual journalism that's being done here. Let's take a note of that. Actual journalism. They've actually polled CIOs, equity strategists, portfolio managers, and CNBC contributors who manage money, okay, but where they stood on the markets for the rest of 2021. So this is the kind of information we actually want to pay attention to. This is not an opinion piece, or it's a collective opinion piece, if anything. So nearly half of the respondents said rising interest rates could hurt stocks. Okay. This article, the reason why I highlighted the date, remember what I said yesterday and what I'm telling you now, same thing. Nearly half so they're worried about stocks. More than 60% believe the 10-year treasury will reach levels higher than 2%. Rising rates. So rising rates, difficulty with stocks. Stocks could be the first domino that falls. Real estate will do well in this inflationary circumstance, will continue to do well. Cryptocurrency, Bitcoin in particular, I think will also do well. I think it's about to break out right now. So we look at this, oh man, down 8 basis points. Just can't get a break. Oh man, this chart is the death of me. So let's talk about, we got a questioner here. Let me see if I can find this. Okay. So I don't know who this person is, but I am going to call them out right quick because I don't know who Janlon is. I don't know if Jan is a man or a woman. I don't know. But I took their picture off because I'm not trying to necessarily put people on Front Street. But what was interesting about this, and the reason why I'm going to take the time to call it out, is because I sent a private video yesterday. A video that I recorded, I did not publish anywhere. I do this for clients. I do this for realtor friends and partners, where I'll send out a video to them to make a video directly, specifically for them. I don't publish it anywhere. And so this comment was on one of those private videos. And so someone must have shared the link, which is, it is what it is. I'm not going to say, don't share this link. Someone shared the link. Well, Jan Long commented, how has the Fed lost control? The most bullish period for rates is April through July. What? What is that? Has nothing to do with anything. The month of the year has nothing to do with rates. Also, the long-term trend is still down for rates. You're using a short-term chart to make assumptions for longer term. Okay. So let's address this. So the long-term trend, so how has the Fed lost control? Well, you can look it up if you want. There's an article, and there was an interview done with Peter Schiff who said the Fed is either going to have to bankrupt the government or the people. Somebody has to be bankrupted. That's how bad it is. They've printed so much money, so many tens of trillions of dollars in the last 13 years, that it is out of control and inflation is rampant. And there is nothing more that they can really do about it other than continue to print money, which doesn't help. They're printing money to buy bonds to supposedly, make the bond market not look like there's inflation, but there is. So they have absolutely lost control. April through July date, the month of the year has nothing to do with interest rates. The long-term trend is still down. This is true. But listen, guys, rates in the 70s were in the teens. Okay, 15, 18, 19%. So obviously the long-term trend is as long as rates are below 15%, you're going to be able to say that the long-term trend is still down. Who cares? So this is a moot point. This is a completely wasted statement. You're using a short-term chart to make assumptions for longer term. Not true, because the short-term chart for mortgage rates, who cares about what mortgage rates are going to be 2 years from now? Did anyone care? No. You care about what rates are today and what they're going to be this week and next week and the week after that. That's what matters. And why does that matter? That matters because you're going to lock in a rate that you're going to have to pay for 30 years, but you're going to lock that rate in soon, like in the next 30 days. You're not going to lock that rate in 2 years from now. You're locking the rate in now. Look, if we lock in a high rate and rates go down, you can always refinance, right? So that's not really the concern. You always want to try to lock a rate in, when that's the best that you can do. If rates get better, great, you refinance. If they go up, then great, glad you locked in, right? So it's not a short-term chart when I'm looking at, a quarter or a year and a half, or the chart that we looked at yesterday where we actually pulled it all the way back to the beginning of the pandemic. It's not an assumption. This is a fact. You can see it right here. This is a real chart. This is really happening. And this is going back to the beginning of the year. And yeah, if you pull the chart back all the way, let's say as far as Barry gives us here, you can see this was, rates were going down here prior to the pandemic. This is the pandemic right here. Now, everyone and their brother expected a recession in 2020. That is the reason that there was a flight to bonds and the reason that caused this. We had the death cross take place in the bond market where the long-term yields became less than the short-term yields. And that's a very scary thing. It signals a recession. It has every time for the past however many decades. Barry Habib came on my radio show right around here and said, hey, you're going to have a big problem. There's most likely going to be, it was the year before this. It was the year prior September. So it was way back. And he said, hey, we're going to have a recession. Rates are going to go down. There's going to be a refinance boom. He said all those things in September 2019. And so it was very well known that that was what was going to happen. So if you look at this, you could still make the argument, that, okay, well, look, but the trend is still, that bond prices are going higher. It sure is. But tell me what good that does someone who's looking to lock a rate right now, whether you're refinancing or whether you're buying. What good does that do someone? Does that do them any good? To know that the long-term, multi-decade trend is still higher for bonds and lower for rates? Does that do you any good? No. I always mention that rates are still near historic lows and in really, really good shape. And rates still are low. They still are, but they're going to go higher. So don't shoot the messenger, and feel free to leave me comments. But if you troll my private video, I am going to have to come after you. So investors see stocks getting pressured, rates going higher. Where will they put their money? Where's your money? Remember, cash is trash. Real estate is king now. Real estate is king. And you know what? A lot of people want to put a crown on Bitcoin, and I can't blame them for that either. Because Bitcoin has a lot of things working for it, a lot of things that are going to work well for it, including, like I told you, remember I said this weeks ago, it was coming. Wall Street was getting on board. Again, Goldman Sachs now saying they're going to offer it to their wealthy clients. Morgan Stanley has already said that. ETFs have been filed for by Fidelity and by Goldman Sachs. The SEC chief just said yesterday, hey, it's about time we approve a bit. It's overdue, he said. It's overdue for us to approve a Bitcoin ETF. So a lot of people believe Bitcoin is king, which is basically a deflationary monetary mechanism. And that is something that's very, very appealing right now. So in these times, as these things shift, take a close look. I've been talking to people like, yeah, I have a lot of cash. Why? This is a time where you need to take a look at how you can intellectually deploy that cash, whether it's into something like Bitcoin or whether it's into real estate. Cash is trash. It's being devalued, and look out for stocks. Okay. And I don't know. I'm not saying there's gonna be a stock market crash, but something's got to give. I don't know what it is, but I know this: you can't buy a house unless you're willing to waive your appraisal or cover the shortage of whatever it appraises for. Now, hopefully we don't see that in the supermarket, because that would mean that the hyperinflation has reached the final end. It has reached all the way as far as it can. And we're hoping that it's just in big ticket items. We can survive with that. We can make adjustments for that. We can adjust our investments for that. We just need to be careful. Okay, guys, that's it for today. Hopefully that's helpful. If you know any veterans who have questions about refinancing or buying using the VA home loan benefit, have them give me a call. That's what I do. That's what I love to do. My information's on the screen. I hope this is helpful for you. Everybody have a great day, and you'll hear from me again at 3 p.m. with Ricky Silver. See you then.